Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1431A, and today's date is November 21st, 2017, and the title of the episode is there a stock flash crash and a bond bubble implosion coming in 2018? Now, before I get started, I just want to make an announcement. I uploaded an interview with Keith Neumeyer. It is on the X22 Report Spotlight YouTube channel. You can go right over there and you can view it right on YouTube, or you can come over to the x22report.com site or newssentinel.com. Scroll down a little bit, look over to your right-hand side. You can play the interview right on the site, or go to steemit.com. That's steemit.com/@X22Report, and you can play the interview right on Steemit. Let's get into the economic collapse financial news. Now, we've been talking about how all the wealth has flowed up to the 1%, and at this point, I don't think people really understand how bad this is, because when we look at the situation, we see 3 Americans, they possess more wealth than 50% of the combined poorest. We have now learned that 20% of all Americans have zero or negative wealth. And what does negative wealth mean? Well, they have lived beyond their means for so long, their debt burden is all they have to show for their life. And all of this is because of, yes, the Federal Reserve. The Federal Reserve System that operates through the U.S. Treasury is to blame for all of this. Without this Federal Reserve mechanism of wealth transference, the current wealth imbalance would not exist. It would be almost impossible to have the number of millionaires and billionaires that are roaming the earth today. These people would still be wealthy, but their wealth wouldn't be completely out of balance with the mass of the people. Now, right now, 1 in 5 households has zero or negative wealth, according to a report released this week by the Institute of Policy Studies. This is a progressive think tank based in Washington, D.C. Now, as of right now, U.S. homes, they've gained value since the Great Recession. But many households have not. Now, remember, they have these 20 cities where they pumped up the bubbles. They kept houses off the market. They have hedge funds come in, investment companies, foreign buyers come in, purchase these homes, and they tell them to hold on to it. Banks are instructed not to release the foreclosed home. Let the people live there. Let them take care of the lawns, and don't put them out in the market. And this way they can push the prices up. And again, this is part of the entire illusion. Now, millions of American families, they struggle with zero or negative wealth, meaning they owe more than they own. This is what the report found. This means that they have nothing to fall back on if an unexpected expense comes up, like a broken down car or an illness. And we see that once again, the actual people who've gone through the financial crisis, many of them lost their jobs, many of them lost their homes, and they never really recovered. And I know many people out there who write in saying that, yes, this has happened to them. I know a lot of people here where I am where they are still underwater in their homes. They bought at the height of the market, and their houses have never reached that point. So their mortgages are much higher than what the house is really worth. Now, the mainstream media, I mean, they're not out there telling everyone this. They're telling everyone that everything is great. The value of homes, they have regained all their value since the Great Recession. There's hardly any inflation, and everything looks great. Everyone is happy, and retail is fine. Yes, we have a problem with brick and mortar, but that's because it's all going to online, and you shouldn't really worry about this. And we could see right now that they're covering up what is really going on in this country. And people recognize what's going on in this country, and they understand that, yeah, there are no high-paying jobs. There is no manufacturing in this country. Yes, there's still manufacturing, but not like it was back in the 40s, the 50s, the 60s. It is all gone. This was done on purpose. It was shipped over to China and other Asian nations because the central bankers knew at this time that the dollar, the petrodollar system, would only last for a certain period of time, and they started to take precautions to move their entire system someplace else. And this is exactly what they've done. And we've been watching and tracking the economy fall apart ever since. We see existing home sales. They drop year over year. This is the second straight month in a row, the first time since 2014. And what we're seeing right now, and it's being reported, that the yield curve is flattening. Now, the yield spread collapsed to its lowest since 2007. Prices of U.S. Treasury securities fell across the spectrum on Monday, and yields rose. From the 2-year yield on down, yields set new 9-year highs. This sell-off and the accompanying surge in yields has occurred for months without downdraft in stocks and without a slowdown in the economic growth. I mean, it's one gigantic illusionary, dreamy scenario where the Fed's tightening has no negative impact on the economy whatsoever. But we could see that there are problems. We've seen this before. And if we go back prior to the recession of 2008, 2009, we saw this happen there. Back in November 2007, the spread was widening after having been negative in late 2006 and early 2007 as part of an inverted yield curve when investors chased after treasuries with long maturities. And their yields fell even as they dumped treasuries with shorter maturities, and their yields rose. Not much later, the financial crisis cracked, and all of a sudden, everything started to crash and come down. And when we look at this, this is a pattern which we've been seeing over and over, which tells us that something is happening in the economy. Now, of course, the Fed is going to try to control this. They're going to manipulate this. They're going to do whatever they possibly can to keep everyone in the dark until the very last moment. But what's very interesting about this, and we've been talking about this in other reports, where inflation is starting to creep up now. And inflation is already moving beneath the surface, and the Fed is very worried about this. And again, many countries out there realize that the inflation rate is much, much higher than it really is. This is why a lot of the countries have been purchasing a lot of gold, keeping that, purchasing a lot more, keeping it, not selling it, because they understand that is a protector against inflation. And everyone should do the same thing. Yes, I know we have the crypto market, but everything has its own place. And I don't believe one thing is the thing that you should go with. I mean, gold and silver has been around for thousands and thousands of years. It has protected people's wealth. Cryptocurrency is something brand new. It's almost like the internet. It's like the Wild West. And any moment, again, there could be some type of regulation. There could be something that comes out that brings it right down. And we have to understand that you can't have all your eggs in one basket. And for everyone out there saying that, oh, we should just do crypto, oh, you should just do gold. No, I think you should have everything in different places to protect yourself for what is coming, because there are all different scenarios that could happen. Just like to have food, water, a weapon, medical supplies, cash on hand. You need all of this. It's not just one thing. So this is why you need to look at what's going on. You need to understand what is going on. And this is why we've been reporting on all these different things. So it's not just one thing. It's stepping back and taking a look at the entire picture. Now, Bank of America, they came out and they had this forecast where they're saying there's going to be a stock flash crash and a bond bubble burst in 2018. Now, Bank of America's chief investment strategist not only once again dares to time this market, which is very difficult to do, they are making a prediction that in the first half of 2018, we're going to see some type of flash crash like we saw in 1987, 1994, 1998. And when we look back in time, we can see what has happened, where all of a sudden the S&P, ran these streaks, and all of a sudden it came crashing down. Now, we need to understand that all of this, and it's very difficult to predict, but we know we're reaching a certain point where anything could bring down this market that can crash the bond market. I mean, look, the central banks have been purchasing tech stocks. We know the corporate earnings. They've been using manipulated accounting methods. We know that they don't have the sales. They don't have the revenue. We understand GDP, unemployment. retail sales, it's all falling apart. And this is all happening at the same time. Now, what's very interesting about this in 2018, we understand that the Economist magazine also predicted that we were going to head into a new currency at this time. And here we are approaching 2018. It's getting closer and closer, and it looks like we might be, in for some rough roads ahead here as we approach 2018, because we can see that everything is building up. And we've been tracking the economy for quite a while, and we realize that things are deteriorating very, very quickly. And I'm thinking after this holiday season, it's really going to deteriorate very, very quickly, and it's going to accelerate because, remember, 70% of GDP is made up of the everyday person's spending. Now, if retail is imploding, which includes online sales, because when they lump them all together, they show you that, the sales of retail not doing well. If you go back year after year, you can see that it was not good. This is why stores are closing. It's not because everything is moving to online. This is what the corporate media wants you to believe. This is what the Fed wants you to believe. The government wants you to believe, because they're trying to confuse you and trick you to think that everything is okay. Even though you see all these stores closing, you don't have to worry, because everything's just going to online. They did this once before. Actually, many times before. Every time we lead up to a major crisis, they pretend that everything is fine. They pretend that they're not forecasting any type of recession anytime soon. They tell you that the subprime securities are AAA. They tell you that everything is contained, that housing can never go down. This is all completely impossible because why? We are managing the economy. No, they're not. They're pushing their product, which is debt. So here we are, and we can see that there are financial pundits out there saying that, yes, all of this is turning out to be fake, phony, and false. And we've known this for a long time. We've been tracking it. And this is why everyone has been getting prepared and ready for what is coming. And you still need to prepare. When everyone feels good, when everyone thinks that everything is great in the economy, this is when the economy comes down. Think about 2007 going to 2008. Where people were buying houses like crazy. Some people owned 2, 3, 4 houses. Building everywhere. Everyone was building. The stock market reached all-time new high of like 14,000 points, and everyone thought that this could last forever. Everyone felt incredible. You didn't see that many layoffs in business. Yes, people were still being laid off, but it wasn't being reported on, so people thought that everything was great. And then in a split second, everything changed. You saw people being laid off left and right. People walking out with their boxes. Companies that had been around for hundreds of years were closing down. Corporations were asking for money because they were broke and they were about to go under. So here we are once again at this height where everyone feels great. This is when the central bankers bring the whole thing down. This is when you need to be leery of what is going on. So get prepared, get ready, because we're getting really close. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.